Of course, the war in Iran now moving the stock market this week. We're now bringing in pro trader Jared Levy, a regular contributor on Business First AM, airing right here ahead of our morning newscast. So, Jared, we've seen a lot of news about the war in Iran back and forth this week, but the stock market has actually had its best day in a year on Wednesday with the proposed ceasefire. So should investors kind of remain cautious, or is this a good time to kind of enter the stock market?
It's a tough call, right? Great to be with you. You know, we were up, 1,300 points in the Dow on Wednesday. Oil had its biggest drop since 2020. You know, these things get us excited. But, you know, as a long-term investor, as someone who's done this for 30 years, I still remain cautious because markets are in what I call binary headline mode. And basically that means they're being driven now more than ever by headlines around the war in Iran, interest rates, and the jobs market. And right now, there are potential murky outcomes for all those things. So as much as we want to get excited, and I think if we focus on the war specifically, listen, I want to be optimistic. I want this to be over. I think we all do. But the reality is this conflict with Iran is complicated. And it's likely not going to be short-lived, right? This has been something that's been on for 47, 48 years. And a big source of contention for Iran is their nuclear program. All right. But again, keeping it simple. So the Strait of Hormuz, it's technically back open, but normally 80 to 140 ships pass through this strait. Iran is limiting it to only 12. So that's a problem. We're still not getting all the oil and natural gas that the world needs. And again, that's mainly for the Middle East and Asia, right? So all this stuff, it's really, really difficult to sort of say, you know, yeah, we're going to be all right. Everything's going to be okay. There's a lot of details to work out. And to be honest with you, as we've seen long-lasting peace around the world, it's hard to maintain. So, you know, that's sort of where I'm at right now. I think, again, you've got to sort of approach with a more cautious tone, stay invested, but I wouldn't be getting all gung-ho just yet with the rally we saw.
Yeah, a lot of moving parts with the war in Iran. It seems like the headline almost changes by the hour. Now, we have seen some AI stocks at a lower price. Is this a good time to maybe get in on those?
Yeah, you know, again, I think that it's exciting, right? A lot of folks were chasing these AI names, these tech names for the past 2 years, and you have this little correction, and, you know, it's enticing. But I'll be honest, I don't know if AI, at least here in the near term, is the place that most investors want to turn. I think it's time to get back to basics, look for companies out there that are, again, part of the structure of America, you know, companies that are making money, good companies. You know, you look around you at what's, you know, keeping your life going day to day. I think that's the place, at least for the next 3 to 6 months, that smart investors are probably going to be staying.
All right, and we always love to ask you your stock picks for the week because we know this also changes. What are we looking at this week?
Yeah, so along those themes, right, in our business, we call them value companies or high quality value companies. And there are 3 what are called ETFs. They're funds that you can buy that are collections of these value companies. The first one is SPYV. So that's the Spider's Portfolio S&P Value Company, which again, love it. It focuses only on those value companies, strips out those big growth tech companies, and tends to be a little less volatile. Another one for you is VTV, which is Vanguard's Value Price Index ETF. Again, same theme, strips out that growth, stays, you know, sort of focused on these sort of core companies of the U.S. And last but not least, this one's a little bit more strategic and does some neat things. DFAT is the ETF, and that's a dimensional U.S. targeted value ETF. Again, all of these sort of staying within that less volatile realm, getting away from some of the tech craze and keeping it centered here on America and our growth.
Back to the basics if you're headed to the stock market. We appreciate those updates. Jared Levy with Business First AM. We always appreciate your time.
Great to be with you.
All right.